Welcome to the end of July. It is July 31st, the market update desk with Scott Riley. Super busy day today with stuff going on in the market. All of it really ended up being a positive for the bond market and mortgage rates, it looks like. So, to start off the day, we got the Treasury Department's um, new quarterly funding request. And it said it's going to sell 125 billion of securities, um, and that's going to span between a 3, 10, and 30-year maturity dates, which was important to understand what length of maturities they were going to sell. Now, what was nice about this is it was not as much as what expected. So the refunding request references what the Treasury Department needs, or in other words, what we overspent more than expected within the most recent budget allocations. Now, it wasn't as much because the Treasury specifically came out and said that they did have some money left over from previous refunding requests. So these are good things, especially with more money going to the longer date maturities than the shorter date maturities does help us out. We got the pending home sales for last month that measures signed contracts on existing homes. Now that increased 4.8% in June, well above the expected 1.5%. And so year over year, we're down slightly 2.6%, but that's a better than expected number. Now, why is this important to home buyers? We've been talking about this all year. You can see this decrease now that we've been experiencing over the last 2 to 3 weeks in mortgage rates. This is coinciding with more buyers out in the marketplace, as evidenced by the contracts on existing homes. So when rates go down, volume goes up, more competition comes in the market. Yes, you may save a little bit of money on your interest rate, but you very well could lose more than that on increased sales prices because of the competition. Another item that came in today was mortgage applications. Interestingly enough, as we thought, refinances are now up 7% week over week, as evidenced by slightly lower mortgage rates. The ADP payroll report, that's the big one that we've been waiting on for today. ADP payroll came in, as I did a brief update this morning, as a big miss. In fact, almost 20% less. Market was expecting 150,000 jobs created, came in at 122. On top of that, on the employment section, showed that wages grew less than expected. So we are definitely seeing a pressure downward on prices, which lowers wage pressures. Several sectors actually reported net losses on the month. They included professional and business services, lost 37,000 jobs, and manufacturing was down 4,000. And geographically, the job gains were concentrated in the South. So what's going to be really interesting going into Friday is what is that birth death model going to show? Because that is this big discrepancy versus the ADP payroll, which is actual numbers, and the BLS, which uses implied numbers for small businesses. Then we just got done with Fed Chairman Powell's statement, and also the Q&A came out and said they're keeping rates the same. We expected that. Now, within the commentary, he did, I don't want to say avoid talking about a rate cut in September. He did dance around the issue. One of the comments was there is definitely a possibility for a September rate cut if data continues to be improving. Kept going over the data dependency and needing more data. This is their tightrope that they're walking, and the data dependency is always their fallback mechanism and statement that they give out there. He did turn more dovish on the outlook of inflation, that we're continuing to see improvement, that we're 2.5% right now. Kept preaching about the 2% goal. Also kept the tone up of saying the labor market is weakening. They did change some of their specific verbiage within that, and that's always, half the committees are attorneys on the FOMC, so they are very word sensitive in their comments and dance around a lot of issues. Basically, left that door open, wide open for a September rate cut, as long as the numbers keep justifying it. And I half wonder if they did get a sneak peek at the BLS numbers. They'll be released Friday. Supposedly, the committee was in unison of no cut today, which we expected. That it was probably too soon, but the pressure is going to build now for that September rate cut. And I think if these employment numbers keep coming in as weak as what they are, and the jobless claims keep coming in weak, and we get good inflation data, that pressure is going to be there for a 0.5% rate cut versus a quarter. And now they're leaving open the possibility of still multiple rate cuts this year. Now, they do have to dance around the political nature of rate cuts so close to an election. So we'll keep on top of everything. Hope you enjoy the broadcast. Scott Riley, the Market Update Desk with Mortgage One, 616-293-2189. The Market Update Desk, remember, is your original singular source for market news in the West Michigan area. Hope you have a great afternoon.